Hi, in this video we will discuss about the sixth point and the seventh point in interest on capital. In the sixth point we will discuss the concept of drawings amount of any partner still appearing in the balance sheet, and in the seventh point we will discuss about the concept of P&L appropriation account balance still appearing in the balance sheet. Let's go on to the sixth point first. What is the concept of drawings of a partner, that amount which still appears in the asset side of a balance sheet? Let's understand the concept first. Every time drawings is made by a partner, it is recorded in the books of the accounts. So, assuming that he makes the drawings in the form of cash, every time the drawing is made, the journal entry is recorded partner's drawings account debit to bank account. Now, at the end of the accounting year, all the drawings made by the partner in the entire year is transferred to the partner's capital account, where fluctuating capital method is being followed, or partner's current account, where the fixed capital method is being followed, thus ensuring that the drawings account is closed. So ideally the journal entry would be, in the case of fluctuating capital method, the journal entry to close the drawings account will be partner's capital account debit to partner's drawings account. In the case of fixed capital method, the journal entry to close the drawings account will be partner's current account debit to partner's drawings account. So this will ensure that the drawings account is transferred to the partner's capital or current account and thereby closed. In a situation where the drawings amount still appears in the asset side of the balance sheet, it means that the drawings of that particular partner to that extent has not been transferred to the partner's capital or current account. Now, this is very important when we try to calculate the opening capital. While calculating the opening capital from the closing capital, the amount of drawings which is not transferred should not be added to the closing capital of the partner while determining the opening capital. Now, obviously this will apply only in the case of fluctuating capital method. Why? Because the drawings of the partner will not affect opening capital in the case of fixed capital method. In the case of fixed capital method, while calculating the opening capital from the closing capital, drawings of the partner is ignored. So this concept will apply only in the case of fluctuating capital method. Let's go to the seventh point, where the P&L appropriation account balance still appears in the balance sheet. The concept of profit and loss appropriation account balance still appearing in the liability side of the balance sheet. At the end of the accounting period, after all appropriations are made, the balance profits are distributed amongst the partners in their profit sharing ratio. In the case of fluctuating capital method, the journal entry passed would be profit and loss appropriation account debit to partner's capital account, and where the fixed capital method is being followed, the journal entry would be P&L appropriation account debit to partner's current account. in a situation where profit and loss appropriation account balance still appears in the liability side of the balance sheet, it means that profits to that extent has not been transferred to the partner's capital account in the case of fluctuating capital method and partner's current account in case of fixed capital method. Now this point is important when we try to calculate the opening capital from the closing capital. Such profits still appearing in the liability side of the balance sheet should not be deducted from the closing capital because it has not yet been transferred to the partner's capital accounts. Now this will apply only when we are calculating the opening capital from the closing capital where the fluctuating capital method is being followed. The profits will not affect calculation of opening capital from closing capital in the case of fixed capital method. So this concept will apply only when we try to calculate the opening capital from the closing capital in the case of fluctuating capital method. Now if there is a profit and loss appropriation balance appearing in the asset side of the balance sheet, they represent losses which has not yet been transferred to the partner's capital account in the case of fluctuating capital method and partner's current account in the case of fixed capital method. In the upcoming video, we will see a few example sums when drawings appears in the balance sheet and also when the balance of profit and loss appropriation account still appears in the balance sheet and we need to calculate the opening capital.